European stock markets were higher, with shares in France leading the region. This was as investors digested the last monetary policy decision from the European Central Bank. Asia-Pacific stocks also rose to cap a week in which China's central bank cut interest rates, and the Bank of Japan kept its own loose policy unchanged. In the U.S., investors will be watching to see if the bull market continues to gather pace after stocks jumped yesterday, following news of the Federal Reserve holding interest rates steady this month. Rise business analyst Bode Ososami is here to take us through the markets as the New York Stock Exchange just opened for cash trading. Thanks for joining us this Friday, Bode. Another interesting week closing. Is the bull market continuing in the U.S.? What are we seeing today?
Yes, thank you, Hoa, for having me again on the show. Indeed, the bull market seems to be continuing, albeit gradually. NASDAQ up 0.51%, Dow 30 up 0.33%, S&P 500 up 0.43%. As of course, you know, the U.S. markets initially reacted adversely to the prospect of two additional interest rates rises, as telegraphed by the FOMC and the Fed, and of course the unlikelihood that interest rates will be cut this year. But later we saw optimism around the skip in raising rates and of course the better economic outlook. My take is that what happens after June is still very data dependent, and of course there's still a lot of uncertainty, even as we must admit that 4% inflation is still far from where the Fed wants it to be. But a lot of activity and interesting developments, especially in the technology space, is also boosting sentiment. Riding on the generative AI wave, Chief Executive Shantanu Narayan of Adobe, he said the groundbreaking innovation that they have is leading to the new era of generative AI and positioning them to lead in that new era. Their stock was up 4.4% in pre-market trade. Adobe also posted fiscal Q2 earnings that beat estimates, and of course, you know, they provide content development and marketing software tools, and they raise their fiscal year outlook. I can see that the shares are up 4.16% as we speak. But other technology shares doing well. iRobot soared 22%. After the UK Competition and Market Authority cleared the acquisition of the robot company by Amazon.com. The iRobot deal was announced, you remember, early August, an all-cash deal about 1.7 billion. iRobot designs and builds robot vacuum cleaners, amongst other automation innovation. But I can see that their shares again up 18.82%. So a lot in the technology chip space. The Micron, you remember they announced that they're going to invest another 600 million to upgrade their chip packaging plant in China. They also announced sealing a $1 billion deal to build a new factory in India. Micron is up 2.33%, and Virgin Atlantic, they actually jumped 39% in pre-market trading after the space tourism pioneer said their first commercial flight into space was scheduled for the end of the month. As I speak, their shares are up 44.33%. That's just in a few minutes of trade. So clearly, that's an interesting share to watch. So my sense is that markets were, of course, initially nervous about the messaging of the Fed. Virgin Atlantic, their shares are up 34.98%, but still very, very strong. It looks like that announcement that they're ready to go to space is definitely helping. Markets, they don't look very worried. That's just the message. Hopefully the trend of falling inflation will continue. As you see, the S&P 500 up 0.41%, Dow up 0.41%, NASDAQ up 0.22%. So if you like, you could say the bull market is still continuing.
Indeed, some interesting moments there. Bode, would like you to hold on as we take more business stories. Intel said it plans to invest up to $4.6 billion to build a semiconductor assembly and test facility in Poland. A plant is expected to help meet demand for assembly and test capacity anticipated in coming years. In a press release, the chip maker said the plant will create about 2,000 Intel jobs. Now, the facility is expected to be operational by 2027.
In a report on the Eurozone economy, the International Monetary Fund had warned of persistently high inflation and called for a more restrictive stance for monetary policy, saying this would be needed over a sustained period. Eurozone member states should also rein in their budget deficits, the IMF said. The call for further rate increases comes after the ECB raised interest rates by a quarter point to 3.5% on Thursday.
China's President Xi Jinping will meet with Bill Gates in Beijing today. According to Chinese state media CCTV, the meeting will be Xi's first with a foreign entrepreneur in recent years. He had stopped traveling abroad for nearly 3 years as China shut its borders during the pandemic. The Microsoft co-founder tweeted on Wednesday that he had landed in Beijing for the first time since 2019 and that he would meet with partners who had been working on global health and development challenges with the Bill and Melinda Gates Foundation.
The head of the Federal Reserve Bank in Atlanta, Raphael Bostic, on Thursday disclosed new transactions that violated the U.S. Central Bank's trading guidelines, reviving one of the worst scandals to hit the institution in its history. Bostic revealed 19 transactions involved exchanging traded funds on May 2nd of last year, just 1 day before the Federal Open Market Committee gathered for a 2-day policy meeting. At that time, officials were in a so-called blackout period during which public communications are limited and trading is prohibited.
The U.S. Department of Justice will investigate an announced deal between PGA Tour and Saudi-founded Live Golf, according to a report by the Wall Street Journal on Thursday. The newspaper reported that the Justice Department has already notified the PGA Tour of its intention to review the deal, citing antitrust concerns. Now, the investigation, though expected, will examine all the aspects of this proposed alliance between PGA Tour, Live Golf, and the Europe-based DP World Tour, and in theory, could upend the deal altogether.
Micron will invest more than $600 million in its semiconductor packaging facility in the Chinese city of Xi'an, weeks after the U.S. chipmaker was barred from supplying critical infrastructure in the country. Last month, Beijing prohibited operators of key infrastructure from buying products from the Idaho-based memory chip manufacturer after a probe found serious network security risks.
Now, in the UK, loads of nationwide customers will be waking up to a nice £100 surprise in their bank account after a scheme to reward customer loyalty started paying out. A fairer share scheme was set up by the Building Society to pay out dividends from company profits to members, provided they meet a number of eligibility rules. Of the Building Society's 16.4 million worldwide customers, it is reported that 3.4 million are set for a payment.
English football club Manchester United is negotiating granting exclusivity to the consortium led by Qatar's Sheikh Yasmin bin Hamad Al Thani in talks to sell itself for more than $6 billion. While a deal remains uncertain, the development represents a major milestone in the efforts of Sheikh Jassim, the son of Qatar's former prime minister, who is one of the richest men in the Gulf state, to take over the iconic sports brand.
Elsewhere, Alphabet is cautioning employees about how they use chatbots, including its own Bard, at the same time as it marks the program around the world. Now, the Google parent has advised employees not to enter its confidential materials into AI chatbots, the people said, and the company confirmed, citing long-standing policy on safeguarding information.
Software firm Oracle yesterday laid off hundreds of employees, rescinded job offers, and cut back open positions within its health unit. The The layoffs follow thousands of cuts in corporate America as companies wrestle with elevated levels of inflation and rising interest rates. Oracle's health unit includes electronic medical records firm Cerner, which it acquired for $28.3 billion, its biggest ever deal in December of last year.
Rise business analyst Bode Ososami joins us again to offer his thoughts on those stories. Good to have you again. Now, we got Europe CPI data this morning. Your thoughts on the data and on the IMF call for more monetary tightening?
The latest numbers showed that CPI in the euro area fell to 6.1% May, down from 7% in April. It was also below market expectations of 6.3%. The CPI rate is now at its lowest level since February 2022, though, of course, it remains significantly higher than the European Central Bank's target of 2.0%. The ECB also announced that it was taking its main rate up, just like you said, by 25 basis points, diverging from a US Fed decision to pause its own hikes. We saw that on Wednesday. The decrease in CPI inflation in Europe, according to the data we saw today, was mainly due to a 1.7% decline in energy prices after a 2.4% increase in April. Also, we had a slowdown in cost pressures for food, alcohol, and tobacco, which was 12.5% in May compared to 13.5% in April. Also, the core inflation rate, which excludes energy, food, alcohol, and tobacco, also eased more than anticipated. It was 5.3%. Inflation in Europe is still lower than in the UK. You remember CPI in the UK fell to 8.7% year on year in April, the lowest since March 2022, but higher than in the US, where consumer price inflation has declined to 4.0% in May. In the US, the Fed, in their latest summary of projections, are now expecting to end the year at about 4% or maybe slightly less than that, but that's still higher than 3.6% than they initially thought. The challenge, of course, in Europe is the stagflation is very difficult to manage. The IMF is calling for more tightening, more fiscal discipline to rein in the inflation. But of course, we know that Europe is already officially in recession. And if you look at the recent PMIs, they seem to indicate a very slow climb to healthier growth. So it's pretty challenging times, but at least we are getting good news that the CPI is going down, but I'm sure they're hoping it can go down faster.
All right. And what else do we know about Bill Gates and his meeting with Xi Jinping and Micron still investing in China?
A lot of interesting developments, many major players in the industry going to China. There are some trends which I've observed, especially driving these investment partnerships. First, technology and the digital space is assuming greater importance, requiring a different private and public sector collaboration. Government is getting much more influential, especially after COVID, as we know they stimulated the economy and they really helped demand. And of course, they want something back for that in investment and for that fiscal push. So we're going to see a much more influential government. Second, there is a clear shift from the Western countries to the South, to emerging economies in Asia, led by China. The Inflation Reduction Act was to stall some of that transition, but even with that, the biggest story is that the convergence of new technology, the demographic patterns, geopolitics, and what we're seeing in terms of demand seems to be moving the axis of influence and growth more to Asia, more to the South. And then thirdly, for decades, Chinese businessmen have been going to the West to learn and to master Western markets. But I would say the West still have a gap in understanding how to work in China. That gap is still there. And I think when we are seeing these movements, Musk himself was in China, as you know, and so many other leaders have been going to China. I think a lot of it is just learning. JP Morgan CEO Jamie Dimon, Apple CEO Tim Cook are amongst those who just visited. And of course, we know that this Bill Gates visit is just days before U.S. Secretary of State Antony Blinken arrives in Beijing. Of course, Beijing love these visits as it intensifies, it helps their efforts to portray China as a friendly business environment for foreign companies, even as we have these tensions with the U.S. and with the U.S. government continuing. And talking of tensions, Micron, U.S. chip maker, just like you announced, they were targeted by China's cyberspace regulator, alleging that the U.S. Biggest memory chip maker had failed a network security review. But ignoring the snub, U.S. memory chip makers say they are still going to invest about $600 million over the next few years in their chip packaging facility. They sounded even more bullish. That tells you that all these geopolitical rifts will not be enough to stop trade and investment flows. And it's not just in China. Elon Musk met with Italy Prime Minister Giorgia Meloni on Thursday, discussing the risks of artificial intelligence. And Elon Musk is meeting Emmanuel Macron again for the second time this month, as the French president tries to persuade the billionaire to open a Tesla gigafactory in France. So there's a lot of wooing of big business and a lot of collaboration, and government seems to be playing a bigger role than we are used to seeing.
Indeed. Now, in the UK, nationwide customers will get £100 boost, thanking them for loyalty. Rather unusual. What do you make of that?
Well, loyalty programs are not unusual. Airlines, for example, have points for frequent travelers, and almost every business has some way of trying to reward loyal customers. Financial institutions tend to reward with dividends, buybacks, while depositors and investors, of course, they get their interest rates and appreciation of their investments. But what is changing, is that the primary driver now is the gravity of rising rates and the trend of flight to safety in a more dynamic environment, which implies the return of the importance of well-located branches and deposit mobilization strategies, as cash-flushed institutions with lower cost of funds have an edge. Strong balance sheets and well-positioned branches are now becoming more important. According to Nationwide Chief Executive Debbie Crosby of that institution, she says we have delivered strong financial performance, and they believe they need to, of course, share that success with their depositors. But it's an interesting trend which I think will continue as the competition for cheap deposits continue to rev up, with rates remaining robust. And there will be similar programs like this as the scramble for funds intensifies, especially in the context of cost of living pressures, which, as you know, reduces the appetite to save.
Well, Bode, thank you so much for joining us this afternoon and for analysis.